Hello. Welcome to my channel, my dear friends. My name is Avilash, I'm a trader on XAUUSD. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, this is the 4-hour chart of gold USD in front of us. And yesterday, we saw a perfect bounce from our level of 1954. We had support around 1951 to 1954, and we were waiting for a buy opportunity. Market did not come down to 51, 52, but yes, just came to our level and bounced quickly, and hopefully many of you made good profit out of it. Right now gold is standing at 1974, but this position is not a very clear-cut level to trade right now. So let's try to understand the chart of gold step by step. First of all, let's look at the chart of DXY. As expected, DXY is unable to cross the previous high here because the fundamental factors are not pushing the market up. As a result of which, DXY, after forming a divergence, it is going down, and yes, DXY will face some trouble to cross this level here. It needs a big push again, and right now fundamental factors are not helping or favoring DXY. So there is a possibility that DXY may remain sideways or choppy for the next couple of days. Okay, but if you look at the forexfactory.com or any economy calendar, you will see that today we have FOMC meeting. So there may be some volatility, but as we already know that Fed has already declared that they do not have an intention of increasing the interest rates as of now. So there may be some news and it may bring some spikes to the market. I think that today's event will not give a clear direction to the market, but it may bring some crazy spikes to the market. So please be careful. Especially beginners, new traders, you need to be careful. And those who request me to mention the time, keep in mind that we all stay in different parts of the world. So as a result, my time will not be same as yours. So therefore, you need to go to any economy calendar and adjust the time according to your time zone. For example, on forexfactory.com, you can see that it is showing that FOMC will be around 11:30 p.m. Means if you stay in India, then there will be some crazy volatility around 11:30 p.m. But if you stay on other parts of the world, simply click on the time here and you can adjust the time zone accordingly. Okay, and you'll get to know. So beginners, new traders, try to avoid any open position on during the FOMC. Okay, so this is all about DXY. Now let's talk about the chart of gold. So yesterday we got a perfect bounce, and right now we can see that gold is standing near the previous higher, and we can see that after forming this big green candle, gold is showing indecision right now. Why indecision? Because market has formed a doji and speeding top. Okay, so there is an indecision in the market right now. It is better to avoid any open position. If you already have taken any position right now, especially sell position, then you can be on the trade, because we can also see a divergence. Okay, so usually this type of divergence points out that there is a possibility of market going down. So if you already have taken a sell, you can be on the trade, because of divergence there is a possibility that the market will be going down. But if you simply focus on the price here, then obviously this is not an ideal level to trade. You can see that I have also drawn two lines, one from the top and one from the bottom, and it looks like the market is slowly entering inside this triangle here, symmetrical triangle here. But to be honest, I am not sure yet, and especially in this type of market, okay, when gold is forming dojis, it is better to avoid. Okay, that's why I'm not talking about this line. Personally, I will not trade on these lines. So as a result, I will not suggest you to trade on these lines as of now. The important levels or the strongest levels on the chart of gold are still the same, which is 1995 to 1996. If market moves up, you can definitely expect 1995, 1996 to act as the dynamic resistance from the Fibonacci. If it reverses, you can look for a sell. Then we have strong resistance around 2009 and around 2005 also. You can see that this is a big zone in the market right now. Not only we have Fibo 50, but also we have multiple moving averages. So this is a whole zone in the market. If possible, try to add 50 moving average and 200 moving average and 100 moving average. These three moving average work as a team and wait for the market. Okay, but right now you can see that before these two levels, we also have the 50 moving average coming down. So during the day, if market starts going up, you can expect the 50 moving average to also act as the dynamic resistance. Right now, I cannot give you the exact number because this is dynamic. It will change from time to time. So if market goes up, simply at the 50 moving average and observe the market around the 50 moving average. Hopefully, market will face some trouble. If it reverses, if it shows price rejection from above, you can simply go for a sell position. It is around 1985. Okay, it is around 1985 because right now it is standing at 1987, and after a few hours it will be around 1985-84 level. And if we look at the chart prime, then we can see that chart prime generated only one signal yesterday and it gave around 40 pips. And the previous signals were also quite good. So overall chart prime is doing a great job and the divergences are also working nicely. If you know how divergences work, then obviously the tool will be very useful for you. Those who do not know about chart prime, it is one of the best custom indicator in the trading world right now. You can see that apart from buy and sell signals on the chart, you also have an oscillator which shows us the overbought oversold levels and also the divergences. It also have multiple time frames support and resistance levels. You can also see that they have automatic chart pattern detection. Okay, they have the oscillator, they have the candlestick pattern detection. If you zoom in, then you can see that yesterday, though there was no buy signal generated, but market clearly mentioned that bull E means it's a bullish engulfing candle and you can go for a buy. So it is a very nice tool. If you simply go to their website, you'll find everything. They also have an awesome community on Discord. If you have any questions, feel free to reach out on Discord server, and they also have a tutorials page where you can understand how the tool works. They have a tutorial section. They also have a separate strategy section so that you can understand how the tool works. It's a very awesome tool. Right now they are giving a lot of discounts. Feel free to check out the link in the description. So these are the three trading opportunities on the chart of gold if market shoots up. And right now, as market is in indecision mode right now, but still if you have a sell position, you can be on the trade because we have divergence. I do not trade blindly on divergence because I prefer to trade along with the price. But still, if you have taken, you can be on the trade. Again, I'm repeating, we have a big resistance zone around 2009-2005 level. Later on, it can also switch to 2002-2003 as well. It depends on time. So better you add 50, 100 and 200 moving average, because if market goes up, then obviously they will be performing the role of dynamic resistance. The first resistance will be the 50 moving average around 1985-84 level. If market reverses, you can take a sell position. But after news, if market becomes crazy, do not trust. It will not work. Fundamentals, when they dominate, the technicals do not work. So before news, you can definitely expect. Secondly, if market hits 1995-1996 level, you have the possibility of a resistance. You can take a sell, and then you have the big zone of 2005-2009 level. Okay, and if market starts falling, then obviously we do not have any immediate support. The previous low of 1950, okay, the previous low of 1950-51 is still present. But 1950-51 to work as support, market needs to be flat. There should not be much volatility, then only you can expect that 1950-51 will work as the support. In my previous videos, I have already explained that we have good support. We have good support, or the strongest support, around 1936. So the strongest support of 1936 is still very much present because of previous price rejection around the area, as well as we have Fibonacci. And we also have some sort of support around 1945 as well. If you have watched my previous videos, then hopefully you are aware of these levels. Okay, but sadly right now market is in such a position that it is better to avoid, because if I remove the drawings here, then you can see that after this fall market seems to be sideways, but we are not sure yet. If we go to the hourly time frame, then also we do not have much clarity about the levels. We can simply see that previous level is there. If we go to 15 minutes time frame, then also we do not have much things to discuss. There is a chance that if market starts falling, then 1964 to 62 may act as support during the day, but I'm not sure because of previous price rejection around this area. So let's wait and watch. I think market may wait for the FOMC to bring some volatility. Okay, so those who are on trade right now, you can be on the trade, and those who are looking for fresh opportunities, it is better to wait for the market to come down to our level. It is not possible to understand market on each and every level. After all, we are retail. Even the big guys also do not understand the market. Even the big institutions also cannot predict the market on each and every level, and we are retail traders, so it is always better and safer to trade on the levels that we understand. Okay, so whatever we have discussed so far are the levels that we understand. Okay, so it's better to avoid, okay, when you do not understand the levels. Okay, so that's all from my side, my dear friends. Follow proper risk management. I can be wrong as well. So bye bye, take care, see you tomorrow.